What if I told you that there's a world where dreams can either 100x or die in a liquidation week? A world where people make millions of crypto without ever actually owning any coins, just by betting their soul on the direction of the price. Well, welcome to Perpetual Futures Contracts, the instrument that made me rich and my enemies poor. Stay tuned.
We're escaping the matrix.
GM. Welcome back to my channel. The only channel where you get market knowledge wrapped in delusions of grandeur. Today, we dive into perps. Not the criminals, the contracts. So strap in, Degen, we're going to war. So first of all, what the fuck is a perpetual futures contract? A perp is a contract, not an asset. You're not buying BTC, you're making a side bet on its price essentially. Compared to traditional futures, on the perpetual futures, there's no expiration date. You can hold it forever or until the market eats your lunch. You can either go long, so you're betting on prices to go up, or you can go short, so betting on prices to fall. And now for the interesting thing, you can do it with leverage. 5x, 10x, 25x, 50x, even 100x. And some wild brokers even decide to give you 125x. Fuck Ethereum. Some brokers even give you 125x. Now what does that mean? Well, this just multiplies your position size and your account size. So let's assume you have $10,000, okay? And you open a position with all of your money. You're super convinced in this new altcoin and this is going to the moon and this is the next best thing. And you're like, well, I only have $10,000 to go into this, but I want more. I want $100,000 to go in. Well, fear not. The exchange has got you covered. You just take a 10x leverage. Now you have a position that's worth $100,000. And if you're right, well, you'll make a fuck ton of profit. And if you're wrong, congratulations, you'll get liquidated. Perps are the tool of traders, gamblers, and gods. Sometimes all three in one. But every good trader has fallen. Every gambler has had his downfall. And even gods have fallen. And the falling is the liquidation. What is a liquidation? Well, when I said that these exchanges give you, much more money than you actually have, well, they don't do it because they believe in you or because they're like, oh, he seems like a great guy. No, they obviously do it because first of all, then they can charge you higher fees for opening and closing your position. And they also cover themselves. So let's go back to the example from before. $10,000, 10x leverage, $100,000 position. If your position goes down by 10% now, then the position would technically be in a drawdown of $10,000, which is all you had. So now, shortly before that, so let's say when you're down 9.5%, so 95% of your whole stack, your exchange will give you a little email saying, dear trader, unfortunately, the mark price of asset XYZ has hit price XYZ, which is close to your liquidation level at price XYZ. That means that you're this close to getting fucked. Because if it actually hits that price, your position is forcefully closed and all of your money is gone. Every single cent that you put into that position is gone. Forever. Done. Nada. You're out. Let's put it that way. From a certain moment onwards, you think you're in a trade. But you're not. You're in a war zone, okay? And the war is against getting liquidated. And basically, everyone wants you to get liquidated. So, you better be prepared for that. Now for the real God moves. Funding rate and open interest. Every 8 hours, longs and shorts pay each other. If the market is mostly long, then longs will pay shorts. Other way around, shorts will pay longs. So sometimes, just being wrong can also pay. If you're positioned to milk the crowd, of course. Fuck you and fuck Ethereum. First and foremost, I would like to inform you that the next part of the video has actually been recorded once already. But due to our immense videography team, who did not notice that the camera was no longer recording, I can do the whole thing again. What do we learn from this?
Fuck Ethereum.
Yeah, yeah, fuck Ethereum.
That's how it is. So, what is the funding rate? Every 8 hours, longs and shorts pay each other. So if the market is mostly long, then longs will pay shorts, and if the market is mostly short, then shorts will pay longs. Very, very, very brief explanation of it, and maybe on the channel I will explain once how it works more in detail, but for now that's all you need to know. So on occasions you can get paid even when you're wrong, just if you're positioned to milk the crowd, okay? That's all you need to know for now, but essentially it is a fee that you need to pay to your broker for having a perpetual futures contract open. Obviously, do not do this for free. Usually, it doesn't affect your position massively or your profits or your losses. But of course, if you lose the trade and you also see that you have to pay funding fees, well, kind of shit. Open interest, very shortly as well. Open interest is a very, very interesting thing because it shows you how many contracts are currently open. And if the open interest spikes, but price is stagnating, well, that's obviously a sign that something's building. You know, the snake is coiling.
Okay.
Now, I've talked about liquidation, and you may think, but Mimoway, how do you not get liquidated? First of all, I'll stop you there. I probably got liquidated more often than you entered the trade, my friend. So, don't be fooled. Don't be fooled by any gurus, oh, I've never been liquidated in my life, or I've never hit stop loss in my life. Everybody gets liquidated, okay? It's part of the market. The key is that it doesn't happen too often and that it maybe happens in a controlled fashion, okay? And trust me, I've been liquidated for amounts where now I sit here and I'm like, why did I trade that? What was going on right here? It's part of the learning experience. But that's why you are here, because then I can tell you what not to do. Will you probably still do it? Yes, because people told me not to do what I did, and I did it. You will have to make your experiences in life and so also in trading. Liquidation is part of the game, okay? But maybe I'll give you a couple of advice on how to avoid it for as long as possible. So first of all, I would never have perpetual futures contracts as my long-term bags, okay? It's something you have if you have a high conviction play. Let's say you think Bitcoin is gonna break out, then, you know, you take a coin that has a high beta to Bitcoin, so which, you know, in correlation grows faster but also falls faster, and you take a leveraged play on that with a calculated risk of your account size, okay? That's something you can do, but you do not open a 20x long because you think that Solana is going to be the best coin for the next 10 years, okay? Because at some point it's going to drop 5% and you'll get liquidated. So that first of all, perpetual futures contracts are for trading, not for long-term investing. If you trade, you should on max risk 1 to 2% of your account size, not more. You should use stop losses. I know that most of you will not always do that and at one point get liquidated. But let me tell you something. Some of you might actually make it in trading because you're already in this video, meaning your For You page is already cooked because it's full of trading, which is good. You're cooked in a good way. You're already ahead of probably 95% of traders. Yes, 99% of traders lose, but 95% of traders don't try, okay? So get all these metrics out of your head. Some of you are actually gonna make it. So if you are in trading, stick to your plan, tight stop losses, or well, stop losses in the first place, 1 to 2% risk of your capital. Don't do dumb plays, stick to the plan, don't overtrade, trade trends, don't try to be a hero. There's a lot of ways to not get liquidated and essentially just want to get liquidated. But at the end of the day, it's part of the game. You will get liquidated, obviously getting punched in the face for, you know, maybe 10% of your account size hurts a lot less than getting punched in the face for your whole account. Okay, let me just tell you that out of experience, okay? Don't go down that path. So let's go over some common noob mistakes that, you know, the big whales and the god traders profit of massively. When you are trading news with a 20x leverage, what do you expect that happens? So you think that you can predict news, so when, for example, Jerome Powell is speaking, better than most experienced traders in the world. Actually hold it that way.
Why?
Do you not know the meme? That in Australia everything is, upside down because it's the land down under.
What does that mean?
I'm not gonna get rage baited by an Indian. So now you may ask, Mimaway, how do you not get liquidated? I'm the undisputed Solana trading god. I'm the greatest trader of all time, so I don't get liquidated. That's a joke, okay? Everybody gets liquidated. I probably got liquidated more often than you enter the trade. Why would you do?
Sorry.
So first of all, you shouldn't fucking trade during news. That's just like an unwritten rule. I don't trade during news. There are some people that can, abuse this volatility, maybe, but then again, they're all sick in that. So am I, but I'm not that good at that, I guess. Yeah, I wouldn't trade during news. And I would certainly not trade with a 20x leverage during news. I also wouldn't use full margin just because the chart looks bullish. You don't know what a bullish chart looks like, okay? I am a god trader, I can jump on every chart and tell you, long, short. I've gone down that path. I've been a profitable trader for time. I've made a couple of good decisions and I've made a couple of very bad decisions. So this game all comes down just to experience, okay? Don't try to be the best trader in the world in your first trade. It's not how it works. You don't learn a skill and are immediately good at it. If you learn something, you're gonna be shit at it. Your first YouTube video that you upload is gonna be shit. Your first, I don't know, seminar paper that you write is gonna be shit. Everything that you do for the first time is gonna be shit. So maybe treat trading the same way and don't try to have a god complex on your first trade, okay? I've earned that god complex. I've earned it. Also, a lot of people actually have no clue how your liquidation price is calculated. Basically, long story short, you're 10x long, the asset drops by 10%, you're out, okay? Bybit actually has a good feature where it calculates your liquidation price. I would assume that Binance has the same. But yeah, if it doesn't and your poor traders are trading on Binance, link in bio to get yourself a Bybit account. Best trading platform out there. Ignoring funding completely is also a pretty stupid idea, but it's your call. Never taking profit is another thing that I see. Like, some of you actually are on the right side of history in your first trade with a 20x long. And then you sit there, yeah, arrogant as you are, with your hundreds and hundreds of percent of profit, and you're like, nah, I'm not taking profits here. Diamond hands, diamond hands. You don't even know what hands are. How the fuck are you gonna have diamond hands? So if you are in profit, hundreds and hundreds of percent of your first play, that was completely risky already, maybe take partial profits and move your stop loss into profit, okay? It's just a suggestion, but would be a good idea, wouldn't it? So as a little resume, what did we learn today? We want to trade with lower leverage, not send our full account into a play that we have analyzed for 5 minutes. We want to use stop losses. Like, religiously we want to use stop losses, okay? They are really fucking important, actually. I can sit here and scream, get rich or get liquidated, ape all in that coin, ape all in that coin. No one is actually ever all in. No one that's actually making it in the market is ever all in one coin. So stop that bullshit right away. Never all in with one coin. A lot of you should probably stay far away from trading sideways chop. Mean reversion trade systems are a thing, but arguably trading the trend is much easier. So you should stick to that at the beginning. There's millions of trading strategies out there. And surely I'll cover some of them on this channel, so make sure you subscribe to not miss out on any of those. But for the beginning, it's just important that you get onto backtesting, okay? What is backtesting? Well, you go and see the historical charts and you make up a theory. Hey, I think this and this. I think if the 50 EMA crosses above the 200 EMA, I should go long. I think if the 50 EMA goes below the 200 EMA, I should go short. So now you go onto historical chart, you see how often you would have been right, how often you would have been wrong, how much you would have profited off the winners, and there you go. Now you can calculate your EV, which is your win rate multiplied by your average risk-reward ratio on every win, negative your loss rate times 1. If that's positive, congratulations, you have a profitable system. Now you can try to run that on the live charts. Before that, I wouldn't even hit them, but that's why most traders fail, because most traders just jump right on the chart. I'm sorry, But if you start doing MMA, you're not jumping in the cage with John Jones after like an hour of training, are you? More than welcome, right? It would be very, very fucking entertaining for YouTube. You train for years and years and years before you have your first amateur fight. But you think that you can just look at the chart for 5 minutes and be like, I'm a profitable trader now. It's not how it works. Do the boring work first. Then you get to the fun part. So degens, you've made it to the end. You now know what perps are, you know how to trade them, and if you listen to my advice, you also know how to not get liquidated within your first trade. You know how to survive, which is the most important thing. But if you really want to walk among the gods, yeah, then we have created a free downloadable e-guide for you guys that has all the information of today's video and some extra. Just go to the link in the description, enter your email, and we'll send it to you. For the rest, don't forget to join the Meme Away cult, follow for more alpha, and always remember, stay GM. GM.
Shorty in the bed, yeah, big tits too. Crypto king, I don't miss. Money too long, got the world on my wrist. Solana up, Bitcoin lit, Lambo so clean, and the doors do this. Crypto king, stacks too mad.